That is so unfair to put that on before I've had either breakfast or lunch. Because Jeff Hahn and I are talking about, you're either a fan of cheddar cheese on apple pie or you're not.
Right.
You love it either way, but boy, that looked good.
Yep.
How can I stay on a diet when I just see apple pie, you know? It's just, because that's exactly now what I want for the next 4 hours. So anyway, listen.
So wait a minute. So you're dieting?
Well,
we all
trying.
are dieting?
Yeah. You know of this?
Well, you know, the thing that we're in an office, right? And people are bringing food in all the time, and I can't eat any of it. And the joke is all I have to do is look at a donut and I gain 2 pounds.
Exactly.
Right? So,
exactly. Amazing.
The pie looked good, though.
Yeah, real good. Well, you know, maybe with the market being this way, maybe we should start thinking about eating more. Let me tell you, one look at your 401k, folks, and you're going to see the reflection of a very volatile market. So we are going to chat with certified financial planner Jeff Hahn from SC Parker, right on Main Street in Williamsville, to find out if we should be panicking or not. Good morning. I don't want to panic, but I don't like the way this is going.
Well, and we get paid not to panic.
I know you do.
Although when you see it down, the Dow down 400 or 500 points in a day,
yeah.
You know. But what we have right now, and especially since the beginning of the year, right? This has been one of the worst opening periods for the stock market, and it's really down about 10%. Yeah. Which is a correction, right? If you go back to its peak early November, or again in July and August, early August, you're down probably about 12, 13% on the market averages.
Why does it have to correct on our time, on our money? What's the deal with that?
You know, I remind clients, and I have to remind myself, that corrections are normal.
Yeah.
You know, the stock market is made up of thousands of different companies, and so there's thousands of variables, and they all change value minute to minute when the market's open.
It's also a reflection of what's going on around the world. So what, for example, is going on in China?
Well, you have several things. So you think we got volatility on the market.
Yeah.
Theirs is, you know, the Chinese market is different. It's not open to everybody. You have different accounting standards. You have a different governmental situation. It's, you know, so basically I don't trust it a real lot, right? Never have. And but it's much more volatile. Where ours does this, theirs does this, right? The other thing with the Chinese is that they've been growing so much. There's so much building, so much manufacturing, so much consumption of raw materials and oil and things along those lines. And it's really a situation where they've transitioned, or are transitioning, from a third world economic system and conditions, right? The population is so huge, right? Them in India have really gone from third world to a more middle class, and in China you have a very large ruling class, right? And it's always been that way.
But if you have mutual funds, and those mutual funds include international funds, what's happening in China may be reflected in your portfolio.
Well, not only that, but for your domestic stocks that do so much business in China.
Everything's being manufactured there.
Well, not only that, but take a company like Apple. A few months ago, Apple was $135 a share. Today, it's $92, right? So that's a 40%, 35, 40% drop in value. Okay, a lot of people in China buy iPhones, right? So it's a big part of their market. So is it the theory or the reasoning is that as their market slows down, that will affect the earnings and business of some of our larger local companies, national companies, U.S. companies.
Now, also, what is happening with oil, and how is that affecting the markets? Because we love to see the gas pumps drop. We love that we're starting to see where gas might even be under $1. And let me tell you, we're still getting gouged in Western New York, because if you go to New Jersey, it's been below $2 for months. And here in Western New York,
Yeah, I know.
I don't even want to go there.
It never seems to come down as fast as it goes up.
No, not around here anyway.
Yeah, it's kind of like the stock market, the opposite, right? The stock market goes down quickly and rises more slowly.
But that has to do with the stock market as well, with oil?
Well, oil is a big, energy is a big part of the economy. and you're into a very large subject there with geopolitical concerns
Yeah.
and things along that lines, right? The U.S. is now the largest energy producing country in the world. Used to be the fourth largest just 5-6 years ago. But with oil coming down from it was about $100 a barrel.
Right.
It really should have been about 80, 70, 80, and now it's into the 20s.
Whoa.
So that makes it unprofitable, or it actually costs companies, domestic oil production, it costs them money to produce oil at $28, $29 a barrel.
But are we still importing then oil from the Middle
Yes.
East?
Yes, we are. Much less than we used to, right? But there is still a lot of production going on in the world. Basically, the number I heard was the world consumes about 90 million barrels of oil a day. It's currently producing about 93 million barrels,
Okay.
right? So you actually have ships floating around in the ocean waiting for somewhere to take their oil because there's no market for it.
So the market, the stock market is down.
Yes.
When oil prices drop, when gasoline prices drop.
Right. Well, when oil prices drop so fast and so much, that's where the problem is. Okay, so it has affected any company involved with oil. So a lot of your utility stocks, right, have got hurt, right? So 2 years ago, our utility fund, the fund that we use for utilities, made about 15%. Last year it lost about 15%, so it gave back everything it had made in 2014, right?
Oh gosh.
I'll give you another example. National Fuel, you know, state old National Fuel, right, was a $70 stock a year ago, or around there, right? Now it's a $42 stock, right? So if you have, and a lot of people own that stock because they work there, right? But if you had $10,000 in National Fuel stock a year ago, it's worth $6,000 right now, and that's tough for people to take, right?
But if you have a 401k, and that means that you're constantly buying, okay, you're also during this time buying stocks much less money.
Yes, the market is on sale for you.
Right.
And that is a systematic investment program, and we love systematic investment programs. My firm conviction for the normal person like you and I, that a systematic investment program is the key to building wealth over a long period.
Oh, I'm so glad to hear you say that because I'm ready to walk to the ledge.
No, don't. Okay. If anything, if you're involved in a 401k or you have a monthly deposit going into your account, and we do a lot of that kind of work, right? Now is the time to pour on the steam a little bit. Right?
Okay.
I'd go down and say, if you just got a raise or something like that, up your 401k a little bit. Okay.
Okay. Yeah. All right. And so that's what.
It's hard, right?
It's tough to take because we don't feel like we're in control of this. We just watch it, or we call on and say, "Oh, it's down again." You know what I mean? This is what we're banking on for our future, and to have this happen. Well, it'll be interesting to see what next year's elections do to this.
Well, yeah. It will be, of course, but the elections are an event. Okay. What you want to concentrate on is the trends.
Okay.
Right. And basically, it's the market. The trends have gone flat.
All right. Listen. What you want to do is call Jeff. Okay. SC Parker and Company, right on Main Street in Williamsville, 632-6800, and you'll feel a lot better about what's going on. scparker.com.